have a bunch of stuff to go through today. And you'll be happy to know there's lots of calculations. So, just as a reminder, so let's see here. Hold a second, I want to go through. So you got some chapter 2 homework and assessment assignments due this Thursday by 11:59 p.m. Okay, so make sure you make note of that. Let's see, so today is Tuesday, the 19th. We've got, so we're gonna be finishing up chapter 2 today. I wouldn't be surprised if we need a little bit more review of some of the calculations on Thursday, so I'm perfectly willing to do that. And if you have any like homework questions or things of that nature on Thursday, we can kind of go through those as well. Okay. Questions? No? All right, so real quick, what I want to do is kind of review a little bit what we did last Thursday, just to give you a reminder here. And I want to go through as well a little bit more this exempt versus non-exempt status, because I think I kind of went through that pretty quickly. So we talked about the Fair Labor Standards Act so far, the enterprise coverage and individual employee coverage, who is covered, who is not covered, kind of established that the vast majority of employees in the country are covered by the FLSA. Not everybody, but almost everybody. Let's see, we talked about as well that definition of what is an employee versus what is a contractor. That's important because contractors would not be covered by the FLSA. Also in the payroll field, payroll professionals mostly deal with employees. There could be that opportunity to, for the payroll department, depending upon the size of an organization, to submit payments to contractors as well, and maybe be involved in producing those end of the year documents called 1099s that are issued to contractors. But for the most part, 99% of payroll employees' jobs are going to focus on assisting employees with the payment of their salaries, of their wages, and also issuing all of those reports that we will get to. We will talk about all of those. We talked about minimum wage, not just the what the minimum wage is, which I think you all know, have that down pretty well, but what types of activities are included in the calculation of minimum wage as well. Kind of went through real quick. There are some exceptions to the minimum wage. So we've got a training wage of $4.25 an hour. Again, they have to meet those qualifications there. First 90 days of employment for newly hired employees that are under the age of 20. Also, institutes of higher education may pay less than a minimum wage. The big one was, and we also talked about the fact that there are states may have minimum wage laws that are different from the federal minimum wage. If they are more generous, then those state laws would prevail. If they are less generous, then the federal law would prevail. We went through and talked about tipped employees, so that's another one of those classifications of employees that has a different minimum wage, because the assumption is that the tips that the employee makes is going to make up for part of that hourly wage that is required. If the tips are not substantial enough to make up for that minimum wage amount, that if that tip credit that the employer receives is not substantial enough to get the employee up to an average of $7.25 an hour for that week, then the employer does have to make up for that difference. So this is that tip credit that we talked about, the $5.12 an hour, which you add the $5.12 and the $2.13, you get up to $7.25 per hour. We went through some calculations there on tipped employees, and then we started talking about overtime as well. That overtime is, this applies to employees who are subject to the FLSA, and not every employee would necessarily be subject to the FLSA, possibly because they don't meet that the enterprise coverage or the individual coverage, but then also some employees are not subject to the overtime and minimum wage provisions of the FLSA, and we're going to go into a little bit more detail about who those employees might be. We usually think of those as salaried employees, but they're not always necessarily. But for those who are subject to the overtime provisions, we went through and talked about overtime, how that is calculated. Remember, we've got a 7-day consecutive period that we're looking at. It doesn't really, it says, this is an example, 12:01 Saturday, actually it should be 12 a.m. Saturday to 11:59 Friday, that within those 7 consecutive days, if an employee who is covered by the FLSA and who is not exempt from the overtime provisions, they would then be entitled to overtime pay for any time worked over 40 hours a week. I know that's a mouthful. And that overtime pay then is calculated as 1.5 times their regular rate of pay. So those hours over 40 are going to be paid at a higher rate. Employer can offer more generous overtime. They're absolutely allowed to do that. They cannot offer less generous overtime. Okay. There's some exceptions as well for that overtime with regard to the healthcare industry. And those shift workers within the healthcare industry, so the hospital employees. There's no restriction on employers mandating overtime. They can mandate as much overtime as they want, but they just have to pay for it, right? They're probably not gonna, if they mandate too much overtime, obviously they're gonna have a problem keeping their employees. Let's see, what else? I talked a little bit about comp time, that there are, for public sector employees, there really isn't comp time unless it's given within the pay period. So if you take an hour off, or if you work an extra hour one week, you have to then get an hour and a half off the next week, but it has to be within the same pay period. But there are some exceptions for public sector employees. We think police officers, firefighters, those types of employees, so they can receive compensatory time off. All right, so let's go over, I do want to go over this a little bit more, this exempt versus non-exempt. So we've got these two categories, and non-exempt, let's see if this one works, means that they are not exempt, like it says, exempt from the overtime and minimum wage provisions of the FLSA. Oops. So, again, we've got, it's kind of a negative, and then this is actually a positive. So that means that they have the protections of overtime and minimum wage. So they are entitled to any hours over 40, they get paid overtime, time and a half. They have to be paid at least the minimum wage, that's $7.25 an hour, whether that's through tipping, a combination of tipping and the employer's wage, or what, depending upon the type of industry. And then we have this category called exempt, which means they are exempt from these protections. So they don't, if they work over 40 hours in a week, if they're classified as an exempt employee and they work over 40 hours a week, they're not entitled to time and a half for those hours worked over 40 hours. They're also exempt from the hourly minimum wage. Now, I had mentioned early on in this chapter that there is a minimum wage for exempt employees, but it's not based on, it's not an hourly basis. It's on a weekly basis, and it says right here, so $684 per week. Now there are, that means if somebody works 70 hours in a week and they're exempt, let me get my calculator up here. So 684 divided by 70. They're essentially at $9.77 an hour, but in a different week they could work 90 hours. That gets them down to $7.60 an hour. So depending upon how many hours they work a week, that hourly rate is going to change. But this is the minimum amount that they have to be paid during a week if they are an exempt employee. So who is an exempt employee? There are specific classifications of individuals that meet the criteria for what we call exempt employees. And we've got like 8 different categories here. Now the employer does not get to decide, just like they don't get to decide whether somebody's a contractor or a W-2 employee. It is all based on the facts and circumstances of their job. So first one is executive. These would be people who are managers. If they fulfill manager duty, and it says supervises 2 or more employees. So if you're just managing 1 employee, you wouldn't necessarily fall under that executive category. You also have to have the authority to hire, fire, and promote individuals. So if somebody meets the criteria for being an executive, then they can be classified as an exempt employee. Okay? They're still protected by those child labor and the record-keeping requirements of the FLSA still apply. It's just the overtime and minimum wage provisions. Another classification, administrative. So if their primary duty is to perform office work and they regularly use their discretion and independent judgment in performing that office work, okay? That's pretty broad, actually. So, administrative assistant type work, bookkeepers, accountants certainly could fall under that administrative status, and so therefore could be classified as exempt. Professional. These are professions that require some sort of advanced knowledge. Usually we think of CPAs, doctors, lawyers, architects, those types of professions. So requires some sort of advanced knowledge acquired by a prolonged course of instruction. Again, could be fairly broad. Business owner. When you're a business owner, you're the last person to get paid. And there's no requirement that you pay yourself minimum wage. You might get nothing. You might just keep pouring money into your own business and lose money from it. And a business owner is defined as somebody who owns at least 20% of the equity in a business and they manage those business operations. Highly compensated employees, so those who earn $107,432 or more. Now obviously that's going to put them way over that $7.25 an hour anyway, but it means that they're not entitled to any overtime pay if they work more than 40 hours during the week. Non-manual work regularly performs one of the exempt duties of an executive, professional, or administrative employee. So automatically, essentially, if you're in one of these categories and you earn $107,432, you're an exempt employee. Now you probably would already be considered exempt because you fall under one of those other categories. Computer professionals have to have a salary of at least $684 a week or $27.63 per hour. I don't know why they get like a special category themselves, but they do. So if their duties consist of system analysis techniques, design of computer systems or programs, so all those IT folks. Creative professionals, this again could be pretty broad. It requires invention, imagination, originality, or talent in an artistic or a creative endeavor. Actors, actresses, singers, artists, all that particular genre of employees. And then outside salespeople as well. Outside salespeople. What's an outside salesperson? This is somebody who they don't really work in the office at all. They're always out making sales. So they don't really They don't really perform any duties within a home office. They make sales, obtain orders for services, or use of facilities. They are regularly away from the employer's place of business. There is no salary test for outside salespeople. They actually don't even have to meet that $684 a week. Most of those types of individuals are purely commission-based. So, and if they're good at their job, they're hopefully going to make a lot more than $684 a week. If they're not good at their job, they're probably not going to be in that job for very long. Okay, so these are indications of exempt status. Again, they are exempt from the overtime and minimum wage requirements of the FLSA. Minimum wage on an hourly basis. On a weekly basis, they do have a minimum wage or minimum salary that they have to earn. There are, this amount has changed back in, when was it? 2006 or so. It was around the time of the election. The outgoing administration, the Obama administration, had actually raised it. It was like 400. Oh, it was pretty low. 400. I can't remember exactly. It was in the 400s per week, which meant that people could, if they were managing, think about this, like retail managers who tend to work a lot of hours, working 80 hours a week, were making like the maximum was like $400 and some a week that they could make. And if we see, so 684 times, there are 52 weeks in a year, by the way. You'll become very familiar with that. That's $35,568. The $400 a week was around $24,000 a year. So there were a lot of individuals who were making, way less than the hourly minimum wage. That amount was doubled for a short time, up to about $48,000 a year. So it was like 800. What's it? These are rough numbers. Oops. So 48 divided by, by 52 weeks. So it was like, I think it was like $800 and some a year, or a week. Well, that was it was decided then with the new administration that came in 2016 that was too high. They didn't lower it back to the original 400 some. They changed it to 684. Now there's a movement right now as well with the federal government to increase this. To increase this back up to that, about roughly 40. I think they're wanting to some of them wanted to increase it to like $80,000 a year, something insane like that. I think that's a little bit out of hand. Just my personal opinion, but there's a movement to raise that then. This is not indexed for inflation. This has to be, this is, the Department of Labor sets this, but they have to receive direction from the executive branch in order to change that. Okay. Questions about this? Now, it is possible, we look at the different classifications. It is possible for individuals who are not within one of these categories to then be considered non-exempt. So they are protected from the overtime and minimum wage provisions. It is possible for them to still be salaried. We're going to go through some calculations. Those are salaried, non-exempt employees. So they get a set salary every month, but the employer has to make sure that if they work overtime, they're paid overtime. And make sure that the hours that they work are at least the minimum wage amount. So we're going to go through some calculations today for how do we calculate that, right? If you've got a salaried, non-exempt individual, so let's say they make $2,000 a month, but it turns out that they actually worked over 40 hours in a week, that means we have to pay them overtime. We've got to calculate what that hourly rate is in order to determine what the overtime payment is. Okay, and that's one of the calculations we're going to be going through. Not really going to spend much. So we know that child labor restrictions, you can read all of this stuff, and I think we maybe went through some of that pretty quickly. There's no requirement to give holidays, no requirement to give vacation time or grant sick leave or any of that stuff. So we also talked about sleep time and non-compensable activities. I want to get down here to the calculations. What's this one? Records. Okay, so we'll go through this real quick. There are requirements. So we talked about that record keeping requirement. Timesheets have to be kept for hourly employees. Even for those salaried non-exempt employees, you got to keep timesheets. They can be clock in, clock out. They can be on an Excel spreadsheet. They could be in any number of manners, but there is a timekeeping requirement. Time cards as well have to be, so those time sheets are going to indicate the arrival and departure time. Time cards are going to be calculated by the payroll department to record those hours worked. All of these can be done automatically. There are all sorts of different ways that employees clock in and clock out these days. There are biometric systems, iris scans, handprints. A lot of companies, larger companies, will use the cards as well. Smaller companies may still just do a manual recording of that time, but it does have to be recorded. All right, I know I kind of zoomed through that because I want to get to the calculations here. Okay, so how often do employees get paid? It depends. And they can get paid at any particular interval. The most common ones are listed up here. Employees may be paid on a weekly basis. Like I said, there are 52 weeks in a year. So 52 weeks in a year, this would mean it's 40 hours for each pay period. They may be paid every 2 weeks. That's a bi-weekly. Now, we're going to be using these terms frequently, and they're very easy to mix up, bi-weekly and semi-monthly. Okay, bi-weekly, every 2 weeks. Bi-weekly means there are 26 pays during the year. That makes sense. 26 is half of 52, right? So half as many pay periods. 80 hours are worked in each pay period for bi-weekly. Semi-monthly is another popular one. Employees are paid twice a month. Might be on the 1st and the 15th, or the 15th and the last day of the month. It could be on the 7th and the 21st. It doesn't matter what those 2 days are, but it's twice a month. That means that there are 24 pays during the year. Then there's also monthly, once a month. 1st of the month, 15th of the month, last day of the month, but once per month. Now, employers will prefer to pay less frequently because there's a cost associated with payroll preparation, right? If you're paying another company to prepare payroll, you got to pay them for every payroll. If you've hired somebody to process payroll, they're going to spend more time on payroll the more frequently you pay. Different industries like to do it differently, though. Like the construction industry tends to pay on a weekly basis. Employees like to get their money more frequently, right? If you're more of in the professional field, you'll see more of the semi-monthly and monthly pays. An employer can use multiple pay cycles as well within their company. So maybe if it's a construction company, they'll pay the frontline construction workers on a weekly basis, but they'll pay the office staff on a semi-monthly basis. Makes it a little bit more difficult for the payroll department, but that is also quite common. Now you will find when we do our calculations, when we start to get into more and more calculations, that semi-monthly and monthly are the most difficult ones to calculate, especially when in terms of overtime. You can imagine this. Months are different. Sometimes we have 28 days in a month, sometimes we have 29, sometimes we have 30, sometimes we have 31. But if we're always calculating overtime based on 40 hours in a 7-day period, if you're on a monthly pay basis or a semi-monthly, every single pay period might be different, right? But you still have to make sure that that overtime is calculated correctly for those 7 days. Okay, and just kind of a little preview of a complication that you guys you'll notice it when you start to do some of your calculations. Okay, so I had touched upon this a little bit when last week as well, that there are two ways of calculating overtime pay. We've got the common method and we've got the overtime premium approach. Most of us are familiar with the common method, right? Oops, let's get that out of here. This is where we calculate the 40 hours based on the regular rate of pay and then calculate the overtime based on 1.5 times multiplied by however many hours of overtime, then we add those two together. So, for example, let's say we've got $10 an hour and they worked 48 hours. So we would take the 40 hours, the regular pay here, multiply that by the $10, get 400. And then we would take the 8 hours of overtime multiplied by, this would be $15 an hour. Remember, 10 times 1.5 is how we got that. To arrive at, what is that, 8 times 15, 80, 120? Is that right? Somebody tell me. Am I right? 120? 15? Do I have that right? 40? Let's see. 8 times 10 is 80. 8 times 5 is 40. 120. So for a total of 520. The overtime premium approach, we're going to end up with the same number. But what we're doing is we're taking the entire 48 hours. We're going to multiply that by $10 an hour for $480. And then we're going to take the overtime hours, 8 hours of overtime, and instead of multiplying it by 1.5, we're going to multiply it by 0.5. Okay? This is 40. We still end up with $520. You'll see when we go through some of our calculations, even though this is kind of the one that we're more familiar with and intuitively I think probably makes the most sense, we do need to use this overtime premium approach when we're under some special circumstances that we're going to talk about. Okay. Questions about these two methods for calculating overtime? Do you see how it would be though the same amount? There's not going to be any difference between those two. If you have a problem and you've got to calculate it under both scenarios, if it's different numbers, you've done something wrong. It's always going to be the same under both of those calculations. Questions? All right. So what happens when we have different jobs? Because it's possible, of course, for somebody to work a couple of different positions for the same employer and be paid at different rates. What happens if they work overtime? We've got a few different options here. We could pay overtime at the higher rate, just automatically at the higher rate. So if we've got an individual that they make $10 an hour at one job, job one, and they make $20 an hour at job two, and they worked 43 hours during the week. We'll say that for job one, they worked 20 hours. And for job two, they worked 23 hours. We don't know when they reached that 40-hour point, They may have been working, when they got to, maybe they started the week on this job, and then they ended the week on this job, which would mean those 3 hours were actually worked at the $10 an hour rate. But the employer, with the agreement of the employee, might choose to just, you know what, we're not gonna keep track of when you're working these hours. We're just gonna pay you overtime at that higher rate. So, job 1, 20 hours times $10 an hour, 200. Job 2, we're gonna pay 20. Well, we could use either method, but we're also gonna pay 20 hours times $20 an hour, so 400. And then those overtime hours, are gonna be paid at this $20 an hour. So we've got 3 hours times $30, again, that's 20 times 1.5, for 90 hours or $90 for overtime. So their total would be, $690 for the week. Does that make sense? So that overtime is calculated using the highest rate of pay if you've got multiple rates. That's one way of doing it. There are 3 ways of doing it. Again, this is going to be with the agreement of the employer. The other way, I'm going to leave actually the second way for the last because that's the hardest one. The other way of doing it is just to determine, okay, what job were they doing during those 3 hours? Were they doing the $10 an hour job? Were they doing the $20 an hour job? Maybe they were doing a combination of both. 1.5 hours at one, 1.5 hours at the other. Okay, so our scenario 1, remember we've got 690. Whoops. By the way, these 3 methods will end up with different amounts. Scenario 1 is the one that's most generous to employees, right? All right, so we've got the same deal here. And let's just say that they worked, they still worked 20 hours at job 1 and 23 hours at job 2, but the 3 hours of overtime was worked at job 1. That's when they worked the overtime. So you've got 2 different jobs. Maybe you're working assembly at one job that's $10 an hour, and then you are asked to do delivery as well that's paid at $20 an hour. And during that time, you did delivery the first part of the week, so you worked 23 hours, but then the last part of the week you did assembly, where you're working that $10 an hour job. So those overtime hours were worked at the $10 an hour job, okay? So this is actually scenario 3. In that case, we would take the 23 times $20 an hour, or $460, and then we would have 17 hours times the $10 an hour. And I get 17 because I'm taking the 3 hours were worked of overtime here. I'm going to calculate that at a different rate. And then 3 hours times $15 an hour. Again, this is 10 times 1.5 for $45. All right, now, we have 17, 4, 5, 6, $675 per hour. You see there's a different amount. By the way, this last one, the next one is essentially a weighted average of the 2. We're going to calculate total earnings for all jobs, divide it by the total number of hours worked, and then take 1/2 of this pay rate. This is using the overtime premium rate, and multiply that by the overtime hours. So, same scenario. 20 hours at $10 an hour, 23 hours at $20 an hour. Let me put this down here, so 10, and this is 20. All right, so now we're going to calculate the total earnings for all jobs based on the regular rate of pay. So we've got 20 hours times $10 an hour equals 200. And then we've got 23 hours times, we're going to say, 23 hours times $20 an hour for 460 hours. We're going to total that up. $660. Now, we also have 3 hours of overtime that we have to pay. What we're going to do is divide this by the total number of hours that were worked. So again, this is kind of a weighted average. Divided by 43 hours. This is where we get our overtime rate. So, $15.35. We're going to round that to $15.35 an hour. We're going to use the overtime premium approach, where we're going to multiply that by 1/2, and then multiply that by the 3 hours of overtime. All right, so times 0.5 equals, hopefully you can all see that. I know I'm short, so I can't start at the top. So 1535 divided by 2, so 768. Round that again. This is our overtime premium. And then we'll take 3 times 768, 3 hours, 2304. Here's our overtime. This one actually ends up being more than, oh no, this one's. Second approach, 68304. 3 different numbers. Now the employee is going to like this one more. All right? The employer is probably going to like this one more. They have to come to an agreement. The employee has to have an understanding of how that is calculated. Okay, and that's the responsibility of the employer, to make sure that the employee knows which method they're going to use. Questions? So with this one, like I said, there are times you're going to have to use that overtime premium approach. For this method here, the weighted average method, you have to use the overtime premium, because you're going to calculate the total number of hours by the regular rate and then add the overtime premium amount, that 0.5. No questions? There is, because method 2 is the hardest to figure out, I do have up here kind of the steps to take. And this is on Canvas under the today's agenda. Okay, it's also under chapter 2. It's part of the whiteboard slides that you have access to. Okay. Okay. Now, no questions? I doubt that very much, but we'll continue on. They've got some examples here as well, and you've got access to these slides in here using the three different methods. I'm not going to go through those because we have our own example here. Okay. Now they used the overtime premium approach on all of these methods. You don't really have to with methods 1 and 3, but you do have to with method 2. Okay?
You have to what?
So for method 2, you have to use the overtime premium approach. You can use that method with 1 and 3, but you don't have to. Okay. Okay. So let's take a look now at what happens when we've got a salaried individual. And we've got a lot of examples that we can go through here. So we have somebody that makes a salary. Maybe they make an annual salary. Maybe they make a monthly salary. Maybe if it's a weekly salary, that makes it pretty easy. Usually it's going to be like a monthly or an annual salary. But they are not exempt from the FLSA. That means we have to make sure that they are being paid at least the minimum wage, and they get paid for overtime for hours over 40 hours in a week, which means we have to know an hourly rate for them, right? All right, so let's look at how we do this. First step in this is to annualize the salary. That means convert it to an annual basis. If they're already paid on an annual, like they have an annual salary, then you've already done step 1. You've got the information there. So let's just say $48,000 a year. It's already annualized. Okay? And we'll go through each of these steps in the following. And I think I have a slide up here that shows this as well. Yeah. So I've got this up as well. How to annualize a salary. Okay, let me give an example that's not an annual salary. So let's just say you're paid $3,500 a month. Okay, $3,500 a month. First thing we've got to do is annualize that. How would we figure out how much they make in a year? Times 12, right. So we'll take the annualizing here, which is going to be times 12. So 3,500 times 12. What do we get here? So 35,000 plus 7,000 is 42,000. So there's their annual salary. All right. Then we've got to figure out what their weekly gross is. Go back to the slides. So remember, how many weeks are there in a year? 52. So the next step is we've got to figure out how much they make per week. So 2, calculate weekly gross. So and divide by 52. So 42,000 divided by 52. $807.69 per week. Annualized salary divided by the number of weeks per year. Then we're going to calculate our hourly pay. We're going to base this first example on 40 hours a week, but if their normal work week isn't 40 hours a week, we're not going to divide it by 40, we're going to have to divide it by however much is their normal, whatever they're contracted to work, right? Maybe it's 35 hours a week. Instead, for our purposes right now, we'll say it's 40 hours a week. So, if they're making $807.69, how would we figure out what they're making hourly? Again, 40 hours. On an hourly basis, $807.69, I know you guys know how to do this. 40 hours, what is it on a per hour basis?
Divided by 40.
You divide by 40, exactly. Thank you. So 807.69 divided by the 40 hours, this gives us our hourly rate. So, 2019. Be careful when you're doing your problems because it will say in the instructions when they want you to round. Okay, it could be that they don't want you to round at this point, but they want you to round at this point, in which case the answer might be different for an hourly rate. So 2019 per hour is what their hourly rate is. Now, to determine what their overtime rate is, on an hourly basis, what would we do? What would their hourly rate be? How would we calculate that? I don't know how to calculate it in your head, but yeah.
2019 times 1.5.
Right. Times 1.5. If we're using, and you'll see when we use the overtime premium approach, we're going to do that times 0.5, but right now we'll just do the times 1.5. 30.29 per hour is their overtime rate. So if they made, let's say during the month, they worked 10 hours of overtime. Well, they would get, so if they worked 10 hours of overtime, we would take their regular pay, which is $3,500, and this is in a month, $3,500, and then we've got to calculate their overtime pay. So, what is it, 30.29 times 10 is 302.90 for their total pay of 3802.90. Again, they are not exempt from the overtime and minimum wage provisions of the FLSA, so we have to make sure that they're paid for that overtime, even though they're salaried. Okay? So salaried does not necessarily equal exempt. Okay? We'll look at some other examples here too and go through them. Okay, so we've got Farron, a non-exempt employee, paid $1,500 a month. So our example was $3,500, this is $1,500 a month. He's paid weekly, and he has 43 hours in one pay period. Calculate his gross pay. Now, we've got to, first thing we have to do is annualize his salary to determine what he makes on a weekly basis. So we annualize times 12 months. He's making $18,000. Our example made $42,000. $18,000 divided by 52 weeks. He makes $346.15 per week. Divide that by 40 hours in the week, and he's making $8.65 an hour. Multiply that times the 1.5. His overtime rate is $12.98. Then we'll add the two together, which is exactly what we did here. Now he's paid on a weekly basis. That's why we're not using the $1,500. In our example, they're paid on a monthly basis. He's paid on a weekly basis, so we have to determine what he usually makes per week, which is the $360. Does everybody understand that? That's why we're using, in this example, we use $3,500. Here, we're not using $1,500 because of the frequency with which he's paid. Okay, so $346.15 plus the overtime for a total of $385.09. So be careful with the words. You got to read every word with these problems. Okay, let's look at another example here. All right, Now we've got Eve, another non-exempt employee. Her salary is $2,000 a month, but she's paid semi-monthly. How many times a year is that? Remember? Semi-month, sorry, 24, right. As opposed to bi-weekly, which is 26 pays. This is twice a month, semi-monthly. Semi meaning half. All right, so we're gonna annualize her salary. $2,000 a month times 12, $24,000. Here we want to figure out, and we're doing this so that we know what to add down here, okay? So she's making $1,000 on a semi-monthly basis. Now we wouldn't really need to do these steps. We can probably figure it out in our head, but for the sake of, since we're just learning how to do this now, we'll go ahead and go through all the steps. So semi-monthly gross, twice a month, she's making $1,000. In order to figure out her weekly rate, we're going to take the $24,000, which we calculated up here, $24,000 divided by 52 weeks to get her weekly rate of $461.54. So remember, we didn't list that next step really in our steps, but this is to determine what we're going to add that overtime to. Okay. Next step, the $461.54, we've got to figure out what her hourly rate is. Divide that by 40. Her regular hourly rate is $11.54 per hour. That's what we use to calculate her overtime rate. Multiply that by 1.5. Same thing we did over here. And then we'll multiply that 1731 by the number of hours of overtime that she worked in that pay period. Add the regular $1,000 that she makes on a semi-monthly basis to the overtime to get her total gross amount. Questions? No? I know the questions are going to come in the form of emails. I'm not new at this, I know. Okay, so now let's look at G. Again, non-exempt employee, paid $2,200 a month. Now she's paid on a bi-weekly basis. So, how many pays is that per year? Bi-weekly? Every 2 weeks? 26, right. Okay, so first thing we have to do is annualize it. $26,400 a year. So on a normal bi-weekly basis, when she doesn't work overtime, she's making $1,015.38 every 2 weeks. All right, again, we're going to use that down here. Next step, we're going to take figure out the weekly gross amount. Taking the 26,400 divided by the number of weeks in a year, 52 weeks, to get our weekly rate of $507.69. Then we can use that to get an hourly rate. Divide that by 40. $12.69 for her hourly rate, multiply that by 1.5 to get her overtime rate, multiply that by the number of hours of overtime that she worked. So she worked 11 and a half hours of overtime. So we're going to multiply the 1904 overtime rate times 11 and a half hours and add that to her regular gross. Get her total gross amount. Again, these are individuals who are paid on a salaried basis, but they are entitled to overtime pay. Okay? Questions? I think there's... So I've got the steps up here as well of what you want to do, as well as a little bit more detail on the calculations and how those work. Okay? You can use that to convert. Okay, so what we've been talking about so far are individuals who have set hours. Oh, wait a minute. I might be stepping ahead here. Hold on. Yes, I am. Okay. Hold on a second. Put that down. Right. So what if they don't normally work 40 hours in a week? I mean, up here we've divided this by 40 hours, but if maybe they make $5,000 a month and they normally work 35 hours a week, that's what their contract says that they have to work. Okay, now we've got a little more of a wrinkle. Let's look at this example. Salary quoted to Felicia, non-exempt employee, $1,600 a month. She's paid that for 35 hours a week. That's her normal work week. So her overtime, remember, she's not paid on an hourly basis. The only time we have to pay her overtime is when she gets above 40 hours in a week. Okay? Overtime is calculated as regular hourly pay. So her regular, whatever her regular hours are, between 35 and 40, but then overtime after 40 hours. All right, of the 16 hours of overtime in one pay period, 6 of those hours are over 40 hours weekly. So that means that even though she's contracted to work 35 hours, and this is her salary, she actually worked, what is it, 1 week she worked, well, it could be any number of combinations. And she's paid contract per month, paid semi-monthly. So those 16 hours of overtime, 10 of them were at her regular rate. They were between 35 and 40 hours. They're calling it overtime, but it's not. It's overtime for her, but it's not technically overtime that has to be paid at the overtime rate. The other 6 hours, though, are paid at the overtime rate. Okay? Now, this could be part of her contract. Now, she's contracted. If her contract says, hey, between 35 and 40 hours, we're not paying you anymore, then that $1,600, as long as she still meets the minimum wage requirements, she wouldn't have to be paid for. But the hours over 40, she would have to be. So in our scenario, she is going to be paid for those 35 to 40 hours during the week. So here's the calculation for that. So now we've got to figure out, we're also going to use this regular rate to determine the additional regular hours that she worked. Okay, so we annualize it, $1,600 a month times 12, $19,200. She's paid semi-monthly, that means there's 24 pays per year. So we divide it by 24 to get her semi-monthly gross. Her normal pay is $800. We're going to use that down here. On a weekly rate, divide the 19.2 by 52, weekly rate, she's making $369.23. So if we divide that by 35 hours, so you see that's different. The 35 hours, because that's what she's contracted to work, is 35 hours. So we divide that by 35 hours instead of 40. So this is going to be whatever our normal hours are, right? Not necessarily 40. Usually it's going to be 40, but not necessarily 40, depending upon what she is supposed to, what her contract says there. So $10.55 an hour is her regular rate. Because remember, if she wasn't working any overtime, she was working 35 hours during the week, that's what she would be getting paid. It would come out to $10.55 an hour. We use that to determine what her overtime rate is. So times 1.5, so $15.83 per hour for overtime. Then we're going to add the 3 different factors together. The regular pay, which would be for the 35 hours a week that she's contracted to do, plus those extra hours that she worked that were still under 40 hours during the week, plus the hours that she worked over 40 hours during the week. Add those 3 together. In this pay period, she's making $1,048. Questions? No, you're also quiet. Seriously? No questions? questions, you just need to get into it and do it yourself before you can generate any questions. I get it. All right, this is where it really gets fun. Now, what happens when we work different hours during different weeks? So in our examples, they were contracted to work, 35 hours every week or 40 hours every week. Well, what if they work 20 hours one week and 60 hours another week? That's a fluctuating work week. We've got some choices as to how we can handle this. This is where, and you've got a problem in your homework, at least one problem. For the below example, if any of you have already started your homework, this is probably the homework question that I get the most emails about every single semester, okay? We're gonna first go through the two methods that aren't the below method, okay? Again, so this is a scenario where the employers pay employees who work different hours each week a fixed salary regardless of the number of hours worked, but they're still entitled to overtime pay. So there are a couple different ways to do this. These two easier ways first. First one is we're going to calculate the overtime by dividing the normal salary by the total hours worked. And then we're going to calculate the overtime premium for all hours worked over 40. Okay, so what does that look like? Again, I've got here examples. All right, and I'll write these down again. So first one is, again, we're going to divide by the total number of hours worked. So we're going to use this method. So let's say we've got a $35,000 salary and they worked 45 hours. This is with a fluctuating work week, but we know what they worked this particular week. So we're going to take the 35,000 divided by 52. Blue. Black though. Okay, so again, we're annualizing. Well, we already annualized. It's 35,000. So 673.08 per week. We're going to divide it by the total number of hours worked. Now, this is where the difference is between these two. This one we're dividing by the total number of hours worked. This one we're dividing by 40 hours. So you're going to get a different amount. So 673.08 divided by 45 hours, again. To get our regular rate of $14.96 an hour. So our overtime premium, and again, you have to use the overtime premium with these. $14.96 times 0.5. I know I'm just rewriting this, but sometimes it's easier if you actually watch me do it. $7.48 per hour overtime premium. Worked 5 hours of overtime. So the 748 times 5 hours gets us to 3740. This is our overtime premium, or total overtime premium. And then we add our normal rate, the 673.08, plus our overtime premium. You can see the 673, it's already including the full amount in those overtime hours, because so that's why we're only doing the half. Add those two together, and we get 710.48. So the key here is total hours worked, the amount that were actually worked. The second way of doing it is to calculate it based on 40 hours. So the difference here is that we're gonna divide it by 40. So this amount's gonna be the same, the 673.08 on a weekly basis. We're gonna take the 673.08 divided by 40 hours. Which gets us 1683. This is our per hour. That's our regular rate. Calculate the overtime premium again, so 1683 times 0.5, 842. Overtime per hour. And then that's the amount that we're going to use. It's still 45 hours that were worked. So we'll take the 842 times 5 hours, which gets us to 4210 overtime, total overtime premium. And then we're going to add the two together, like we did here. So 673.08 plus 4210 equals, what do we have here, 715.18? So we get different amounts here. Again, there has to be an agreement between the employee and the employer. Okay. Now, this last plan, you can see that it's up here on the as well. It's the same calculation. I'm just writing it down because, like I said, sometimes it's easier to see the actual process than just look at a sheet. Okay, the BELO plan, the hourly rate is going to be based on the maximum number of hours worked, so that the employee can work. So, for example, here, you calculate the salary as a wage rate that's multiplied by the maximum number of hours, and then add the overtime premium. Again, these are kind of rare. This is for very irregular works. I don't know what the definition of very is, but for very irregular work schedules, you're just all over the place. So there are no deductions for non-disciplinary absences. The guaranteed compensation cannot be for more than 60 hours. What you're going to do is calculate the salary as a wage rate multiplied by the maximum number of hours. So the maximum that they are required to work, again, that would be part of the contract, and calculate it based on the overtime premium based on 50% of that. Let's see, we're not doing that. So let's go back to our example here. So here with the BELO plan, we have to know what our maximum number of hours are. And again, that's going to be a given. That's a given in the problem that you have. So maximum number of hours, for example, in this case, let's say our person, they've got a BELO plan. Maximum number of hours that they're required to work is 42, but they actually worked 45 hours. All right. So now what we're going to do is we've got our hourly rate. Which one did I use here? 1683. We take and here in this one, I've already done the first couple of steps here. So we're going to divide it by 40 hours. Then we're going to multiply the hourly rate of 1683 times 42 hours. And our overtime premium is gonna be $8.42 per hour, so multiply it by the 0.5. They're contracted to work 2 hours of overtime. So now we're calculating what their normal regular pay would be. Because they're working over 40 hours in a week. They still have to be paid for those 2 hours that they're contracted. They can't agree to not be paid overtime for those 2 hours. So their regular salary every pay, first thing you have to do is calculate out what their regular salary every pay, if they were working 42 hours, would be the $708.86 plus the overtime premium of $16.84. So on a normal pay without any of those 3 additional hours worked, their regular salary would be $725.70. Now we have to calculate what their overtime is for those additional 3 hours. Okay? So we'll take the $725.70. We're gonna add the overtime. Now in this one, you don't have to use the overtime premium because we're just calculating those 3 hours. We use the overtime premium in the first part of this calculation, but not in the second. So $16.83 times 1.5 for those 3 hours, so their overtime rate is $25.25. So we're gonna add together their regular salary of $725.70 plus the 3 hours of overtime, because again, they normally work 42 hours, they worked 45. Add the 3 hours, 75, they're making $801.45 if they're part of a BELO plan. You can see that one is actually the most generous for this particular employee. We've got to figure out, again, the first thing you got to do is figure out what that regular salary is. They're contracted to work overtime, but they still have to be paid an overtime rate for those 2 hours, right? And then they worked 3 more hours on top of that. I told you, this is the one that trips, yeah.
I may have just missed it, but why was it 42 and like if it was the max hours instead of 45?
That's just what's in their contract is, so the contract would state the maximum number of hours that you will work for this salary is 42 hours.
Okay.
But you worked 45 hours. So we still have to pay, we've got to figure out the 2 hours of overtime, which, like I said, this would be part of the regular salary. So if they actually worked less than the 42 hours, they'd still get paid this $725.70. It's still gonna be built in, okay? But those additional, and then we've got to figure out how much those additional 3 hours are gonna be paid at. Use this as a guide when you're doing your problems. It will help. Other questions? Okay, so we've got those 3 different methods. Again, this is only if there's a fluctuating work week. You didn't realize payroll could be so complicated, did you? You thought it was just a matter of multiplying. It is a matter of multiplying, but it's a matter of trying to figure out what to multiply. All right. Again, I know you're going to have questions when you actually get to this on the homework. Couple of other things then that we want to talk about. Piece rate. All right. So individuals can be paid in other ways, not just for their time. They might be paid by unit of production. Oftentimes this is used for individuals who inspect items or build items or assembly, that sort of thing. So instead of being paid on an hourly basis, you're getting paid on a per unit basis. Still have to be paid $7.25 an hour though. So that means we've got to do some additional calculations here. So with a piece rate, we gotta make sure that they're paid at least $7.25 an hour, and if they work over 40 hours in a week, they're still entitled to overtime. Well, if they're paid on a per unit basis, but the overtime is going to be on an hourly basis, how do we calculate that? Again, there are two methods of doing that. So the first method here, method A, is going to be based on the hours worked. And I've got this in here. So based on an hour, the first one is overtime based on an hourly rate, and then method B is overtime based on the units produced in overtime. So let's look at, where'd I go? Okay, so the first method here. We've got an individual who produced or inspected 4,812 units. They did it in 47.25 hours. That means we've got 7.25 hours of overtime. Okay? 600 of those units were produced in extra hours. He is paid 12 cents per unit. Calculate the gross pay using both piece rate methods. Oh, did I skip over this part? Yeah, I did. So this first method, we're going to take the units produced times the unit piece rate to get our regular earnings. Regular earnings divided by the total hours worked to get to our hourly rate. And then we're going to use that overtime premium method to calculate the overtime premium. So I'll skip back to method B here in a second too. Okay, so number of units produced times the pay per unit. His regular earnings are $577.44. We're going to divide that by the total number of hours worked, because then we figure out essentially what he made on an hourly basis total. $12.22 is his hourly rate. Now again, that could vary every pay period, right? We do have to make sure that hourly rate is at least $7.25 an hour. Well, plus the overtime hours. Figure out the overtime premium. We're going to take the 1222 times 0.5, so 611. That's what we're going to multiply the 7.25 hours of overtime by. Then we're going to take the regular earnings, 577.44, plus the overtime to get our gross pay. Now in this one, they gave us how many units were produced in the extra hours. We don't need that information for the first method. Okay? We're kind of taking an average in this method. So again, total number of units produced times the per unit pay to get our regular earnings. Divide that by the total number of hours worked, 47.25, to get our hourly rate. And then the rest of it is just how we've done the calculation earlier. The next method, method B, we're going to base it on the number of units produced. This is when we do need to know how many units were produced in overtime. We've got to keep track of that. So we'll take the units produced in 40 hours times the piece rate, and then we'll take the units produced in overtime times 1.5 times this piece rate to get to our gross pay. So now, we have a total of 4,812 units. 600 of them were produced in overtime. So during regular time, 4,216 units were produced, right? So that's why they're using 4212 here. So we've got to subtract the number of units produced in overtime from the total number of units to get our regular pay. And then we've got 600 units produced in overtime times 1.5 times our regular per unit rate. And then we're going to add those two together. So again, first one is based on the hours worked in overtime. The second one is based on the number of units produced in overtime. Still has to meet that minimum wage and overtime requirement. So we've got to make sure as well that, okay, work 47.25 hours. If he was making $7.25 an hour, is he making enough in total for to get him to $7.25 an hour plus the hours of overtime, the $10.88 per hour. So if he worked, and he is, because you can, so $613.44 is well over, it's about 2 times what he would need to make on a minimum wage basis. Okay, so there are those 2 ways of calculating piece rate. I told you there's going to be a lot of calculations today. All right. Questions? No? All right. So we've got some other different, and we can certainly finish this up in the time that we've got. So other types of special incentive plans. So oftentimes employees will be paid a certain amount per hour, but then if they go above and beyond, then they're paid more. So in this example, this is a piece rate payment plan. If they inspect 2,000 units, then they're paid 18 cents per unit. If they inspect over 2,000 but under 3,500, then 24 cents per unit for everything over. So it's a tiered payment system. And then 36 cents per unit for everything produced over 3,500 units during the week. So it's to incentivize them to produce more. We also have like commission types of plans. So if you make a certain amount you do a certain amount of sales over and above what is expected of you, then you'll get an additional, maybe a percentage of those sales. Here we've got Sam sold $40,000 of product. His quota is $31,500. So he went over and above what he needed to sell, and he gets 2% of the excess above $30,000. Okay? His annual base salary is $30,000. Sorry. So the additional amount that he got paid, that he sold, was $8,500. So he'll get 2% of the $8,500 plus his regular salary. So we've got his regular salary here. If he's paid, they don't really say, biweekly. If he's paid biweekly, his base earnings would be this $1,153, and then we calculate the commission, $177, and we add those 2 together for the commissions. If there's anything else, I think that's pretty much everything I wanted to cover. Yes. All right. Do some of the homework before Thursday. Please do the homework. It's due Thursday night. You don't want to wait till the last minute. It's a lot. You'll notice chapter 2 is a lot more homework than chapter 1 was. Come with questions. Okay? Okay, and then we'll also get started on chapter 3. Yeah.